Proud supporters of Africa this week. Engine, with us, you are number one.
Hello and welcome to this edition of Africa This Week, your wrap of what happened across the continent. I'm Mashuduma Sultan. The African Regional Trade Bloc Common Market for Eastern and Southern Africa, or COMESA for short, is considering issuing a regional infrastructure bond and is seeking advisors. We asked Sandi Songwenya, Secretary General of COMESA, to explain COMESA's infrastructure goals.
We are going to build on the successful conference that we held in Lusaka in April 2009, where COMESA, EAC and SADC had a conference to address the infrastructure challenges, and where we mobilized $1.2 billion to finance those infrastructure projects. With regard to the conference that we are having in Nairobi, this will focus on the Central Corridor, that is the corridor running from Dar es Salaam to the Great Lakes countries, and also from Mombasa, and also the new one from the Lamu port to be built in Kenya to South Sudan and also to Ethiopia, and also for the Horn of Africa from Djibouti to Addis Ababa and Khartoum. Now, the priority projects there are rail, road, ports, and inland waterways. These are the projects that we have, and it's important that these projects are funded because according to the projections for traffic that we have for this region, the capacity by both rail and road will be exhausted very soon, and hence the need for the maintenance of the existing infrastructure as well as the provision of new infrastructure. We have more than 500 participants for this conference, and 50% of these participants in the conference are from the private sector.
Right. All right.
And therefore, we do expect that the private sector will also play an important role in picking up those projects that are attractive and viable for the private sector.
It seems to be that there's going to be quite a bit of emphasis on the East and Southern African transport corridors. A lot's been said about the need to really create opportunities for landlocked countries like the new South Sudan and Ethiopia, heavily dependent on the port of Mombasa, and needing to kind of decongest that kind of reliance. What sort of responsibilities are expected from regional member states in this regard? Because those are almost immediate and pressing concerns.
Well, the good news is that all these member states of the tripartite have really, at the highest political level, they have taken up ownership for these projects, to the extent that for some of the projects that were not bankable, they did finance them from their own resources. And what they are now looking for is that additional money in order to implement the projects. But also what is important here is that we also have private sector players that are playing an important role. For example, the Rift Valley Railway, which is run by Citadel, who is a private company, is a case in point.
A groundbreaking survey and report on Nigeria's expanding middle class reveals a nation that is optimistic about economic growth, values entrepreneurship, and is positioned to capitalize on a boom in consumption. Yvonne Mango, Sub-Saharan economist at Renaissance Capital, spoke to us about the survey.
We found that the middle class, which makes up around 20% of the population, which if you consider 160 people is quite substantial. So we're talking about millions of middle class, or people in middle class households in the case of Nigeria. They're well educated. Most of them work for the public sector. Of those in the private sector, around 2 out of 5 of them own their own businesses. Their primary concerns include unemployment, as well as the power situation, which wasn't a surprise. But in terms of just the sheer numbers, we think Nigeria is in a strong position as a middle class, or to have a middle class economy.
Now, the middle class has been largely debt-free because banks for the longest time did not always allow loans given the identification issues and unemployment, like you said a little earlier. At face value, Nigeria's private sector appears to be debt-free, but how long is the situation going to last?
Okay, well, for now, as you rightly mentioned, it's a huge opportunity. Lending in Nigeria is primarily to corporates. However, the opportunity to do retail lending is enormous. And in addition to that, not just banks, but consumer retailers moving into retail credit. In terms of the opportunity, yes, initially, it implies that households will become indebted, increasingly so. But if you look at the level of indebtedness now, it's very low. In the case of Nigeria, probably in the single digits as a percent of the percent of total households. In the case of Nigeria, you compare it to 80% in South Africa in terms of debt to disposable income. So the scope is significant for credit growth in the retail sector, which would of course push up consumer spending. In terms of what it means eventually, well, it happens in cycles. By that I mean the increasing indebtedness of households. Right now we're seeing the United States is deleveraging. However, at this point in time, we see it as an opportunity for Nigeria, given the low level of indebtedness.
And according to your report, about 3/4 of Nigerians are very optimistic about the future of Nigeria. What macroeconomic factors are going to be driving this optimism?
Well, firstly, strong growth. I mean, we've got Nigeria growing at 7 to 8% despite its enormous constraint. Power, as I mentioned, is one of the biggest concerns households face. If you look at the amount of power that's available in Nigeria, it's about 4,000 megawatts for a population of 160 million. You compare it to 40,000 megawatts in South Africa for a population that's 1/4 of that. So the need is significant. Now imagine if these plans that the current or the new government has in place to increase generation as well as transmission results in the realization of a significant increase in electricity generation. The potential for the economy to grow at a faster rate is significant. So that's just one macro factor or a driver of growth that we expect going forward. If you look at the per capita growth rate or per capita income, it's increased almost fourfold in the past 10 years. We're looking at around $1,500 per capita, and that's still increasing. We're expecting that to increase by $1,000 over the next 5 years. So the potential, the opportunity that the middle class themselves are seeing going forward is significant.
A conference hosted by NKC Independent Economists in association with Precinct gathered in Johannesburg to discuss economic and political risk in Africa. We caught up with Udo Udoma, chairman of the Nigerian Securities and Exchange Commission, and spoke to him about recent reforms in the Nigerian capital markets.
The last 2-3 years have been very challenging. One, because of the resolving the banking issues. And you know, the banks dominate the capital market, 60% of the capital market. So we've had to do the two together. Luckily, the governor of the central bank is reform-minded and he's firm and resolute. And those issues are being gradually resolved.
What would you say are the macroeconomic fundamentals underpinning investment profile in Nigeria?
I think two things will help. One is some of the most successful companies are not listed. The telecoms companies, the upstream petroleum company, and a task force has been set up. It was the immediate past Minister of Finance, Segun Aganga, who set up this task force. And part of what the task force is doing is engaging with these companies and seeing what are the constraints, looking at what are the incentives that can be introduced to encourage them to list. Because the NSC is a mutual company, sometimes the ownership issues and the control issues and the accountability issues have sometimes have worked as well as we would have liked. So we've set up a committee to look at the whole demutualization so that it will be much clearer in terms of ownership. You will also have a possibility of the NSC being able to raise financing because it needs to upgrade its technology. We want the NSC should really be at the top. It should be a world class. And so all those things we see being resolved in the next 6 months to 1 year in terms of which way, because the next big challenge for the NSC is really the issue of demutualization.
Economic reform and general stability appear to have been a key focus in President Goodluck Jonathan's new government.
There are other things that are going well in Nigeria. One is the fact that we had a very smooth election. The election results were seen as very credible. We have an administration that is focusing on the economy and which has announced clear plan, clear focus to try and get investors, both domestic and international, and to remove all those bottlenecks that were impeding investment. Some of the things that the president has announced, the visa relaxation. He's indicated that there will be a provision to give genuine investors 5 to 10-year multiple entry visas. The Minister of Trade and Investment, which is a new ministry, with a ministry with a new name. It's an old ministry, but with a new name, which focus is investment, which is a clear signal of the government's determination to remove the bottlenecks and to focus on investment and to raise Nigeria's investment climate in terms of to raise the profile.
At the same conference, delegates were quite optimistic that Sub-Saharan Africa will comfortably survive the current crisis in Europe. We spoke to Thelma Corbett, Chief Economist at NKC Independent Economists.
From a macroeconomic perspective, and we just look at growth, because that's something that sort of is very important. The economies in Sub-Saharan Africa are, for the most part, growing quite strongly at this point in time. There are minor exceptions. If we look at, Swaziland has obviously entered a recession this year and will definitely be in recession next year. But for the most part, the other economies are showing very strong growth. And it's not just oil, and because oil prices are high, it's other commodities as well, but it's also services and it's also agriculture. I mean, the agricultural story in Africa is enormous. If you look at the global arable land, Africa's got, between 50 and 60% of global arable land which is available for cultivation. It's in Africa. It's in Sub-Saharan Africa. So the investment potential is enormous, and together with that, you see continuous improvements in the business environment. If you look at a country like Rwanda, over the past 5 years, the World Bank Doing Business Index has rated it as the top African country in the world in terms of making improvements in its business environment, and it's also in terms on a global basis, it's the second best performing country in the world in terms of improving its business environment. But it's not only Rwanda, it's Mali, it's Burkina Faso, it's Ghana, it's Kenya, it's Nigeria, all making improvements in their business environment. So you see a sort of shift in terms of where it's becoming easier to do business and where the risks are actually declining, generally speaking, from a political and an economic perspective, bar exceptions. We've seen a lot of increase in political risk in North Africa. But if you look at Sub-Saharan Africa, you see a general decline in political risk. You look at the very successful Zambian elections, you look at the successful Nigerian elections, you look at the referendum in Kenya of August last year for the new constitution, which was promulgated. Very positive. So very positive moves overall in many countries in the terms of political risk and also economic risk, making the case for business quite obvious, especially combined with strong economic growth prospects.
After the break, more stories making headlines this week.